Good morning, everybody. Joya Goodrum here with the Chamber. We are here to talk about access to capital with Anna from the SBA. I'm going to turn it over to you, Anna. Go for it. And thanks for being here. And thank you to those folks that are joining us here today.
My pleasure. Good morning, everyone. My name is Anna Shapiro. I am a marketing and outreach specialist at the Small Business Administration Portland District office. We will jump into the presentation. Here we go. I'm going to stop sharing my video so that we help with the bandwidth issue. All right, so for today's presentation, I want to talk about conventional versus SBA lending, the SBA loan programs, some benefits of SBA loans, and resources that are out there for small businesses. We are a small group, so if you have questions, you're more than welcome to unmute yourself and ask a question or drop it into the chat. I'll monitor that throughout the presentation. All right, conventional versus SBA. The conventional lending model lends itself to low risk clients. So lenders, as you probably know, are looking for established businesses that have stable cash flows and proven financials, which leaves a lot of businesses in the dark as far as conventional small business financing is concerned. And that's where the SBA guaranteed loan programs fit into the equation. So SBA loan programs, there are two flagship programs. There's the 504 program and the 7A program. Both of these programs are administered by banks and lending institutions and non-bank lenders. The microloan program is a little bit different, and we'll get into the detail of each one of these programs, but microloan is different in that it is administered by nonprofit intermediaries who work with the businesses, and their amounts, total loan amount is capped at $50,000. Yes, Goya.
Is that a CDI community, whatever that is called?
CDFI.
Yes.
So the CDFI is, it's not, so some micro lenders are CDFIs, but that's not a given. So,
Gotcha.
And then the community advantage loans are also administered by CDFIs, but again, that's not end all be all. They don't need to be a CDFI to administrate that program.
Okay, thank you.
Mm-hmm. All right, so, and then as we were mentioning, community advantage, under the 7A program, we have community advantage and international trade loans. So the SBA guaranteed loan process for the 504 and the 7A is the same. The business applies with the lender. So throughout the entire transaction, from loan request to origination to if you get to closing and then servicing, you, the business, will be working with the lender. If you approach the lender with a small business loan request, they will first assess if you qualify for a conventional small business loan. If you don't qualify for a conventional loan, and it can be for any number of reasons, and different banks and lending institutions have different credit criteria, but for whatever reason, you don't meet that a low credit score, maybe it's a startup business, perhaps you have a cash flow issue, the debt service coverage ratio isn't the same. In other words, you would not comfortably be able to make the monthly payments on the loan with the amount of cash that's coming into your business. Reasons like that would be why a bank would not approve you for a conventional loan. But again, there could be a number of other reasons. Collateral is always a big issue with lenders.
All of those reasons?
What's that?
Can it be all of those reasons?
It can be, yes, for sure. Yeah. And so, and that's where it's kind of sticky. And that's what I was saying, where it's pretty difficult, especially for businesses that haven't been around for a long time, to get to a place where they have sufficient cash flows to coverage your expenses and then take on a loan, where it can be tricky for you to secure a conventional loan. And that's where the lender would then assess whether or not an SBA guaranteed loan would make sense. And so there are a couple of things to note here. It's lender's discretion. So even though a lender signs up to participate as a 7A lender or a 504 lender, they still adhere to their own credit policies. And so there are still limits on what they are willing and what they are not willing to do. So for example, there are lenders under the 7A program, you can use a 7A loan to acquire a business. You can use a 7A loan for working capital for a startup business. But then there are lenders that are not comfortable doing that and won't exercise that option under this with the 7A guaranteed loan, whereas other lenders would look at that. So that's just one example, and in a good segue into noting that it's important to talk with a couple of different lenders about your small business loan request, because one lender might say no, whereas another lender would be willing to work with you a little bit more. Maybe a larger down payment would help pacify some of the concerns, but it all really depends, and that's where it's important to talk to the lender, understand what their criteria is, and you can generally see that criteria online first just to get an understanding. But you're also welcome to meet with the lenders and talk with them about their process and their criteria to qualify for small business financing. But the point is, it's you and the lender. And then if the lender chooses to exercise the 7A guarantee or the 504 program, then they are applying to the SBA. The SBA reviews the loan request. If it's approved, then the lender closes and services the loan. And in the event that you, the borrower, default on your loan, then the SBA pays out the guarantee portion of that loan. So the guarantee is anywhere between 75% to 90%, depending on the loan product. And effectively, the SBA pays the lender that amount from the total loan amount that you took out. So it makes it less risky for the lender, and consequently, they're more willing to issue that loan. And the point also that's important here is there is no interaction between the SBA and the borrower. That seems to be a misconception, especially based on the type of calls that we field at the district office, people calling in and asking to apply for a small business loan. And maybe that's in part due to the EIDL program that was brought up in response to COVID, where the SBA was a direct lender. But that's a unique situation. And there is the Office of Disaster Assistance that issues disaster loans. And in that particular situation, that is a situation where you would be working with the SBA directly, but those two programs are really the only programs. In all other situations, you would be working with a bank, a non-bank lending institution, a nonprofit, etc. So as far as illustrating the spectrum of where the SBA loan fits into the equation, you see here the most viable businesses that have experienced management, great debt service coverage ratio, credit, fully collateralized in a high growth market. That's typically the business that qualifies for those conventional small business loans. And then if, like we were talking about, maybe you have cash flow, sufficient cash flows, but you would benefit from longer term, so that the monthly payments are a little bit smaller, which would then leave you in a better position, and consequently would make you a stronger candidate for a small business loan. And then maybe there's a collateral shortfall, or you're a startup and you have everything in line, you've done your market research, you've looked at your financial projections, and you really just need that X amount of dollars to get you off the ground, then, like I said, the SBA loan programs can accommodate those type of businesses, but it's always going to be at the lender's discretion. And like I said, there are some lenders that are more willing to work with particular business situations, and some lenders that are less willing. And you won't know that until you speak with them. And then, of course, if you have no management experience, there's no potential chance for repayment, really lousy cash flows, impractical business idea, an SBA loan won't save you. And frankly, you won't be able to secure any type of small business financing. But there are organizations out there that can help work with you to get you to a place where you would be credit ready. Ready to ask for small business financing. And some of the programs that I mentioned, the microloan program, and I will mention that, we'll get into that later in the presentation, but I'll just note up top as well, that if you're not ready for conventional financing, if you're not ready even for an SBA guaranteed loan, then the microloan option might be a good fit, because the credit requirements are generally the most flexible of all the programs. There's a caveat though that it is a microloan, so it's capped at $50,000. But the intermediaries who administrate the loan program, they also provide small business counseling. So they would be able to work with you throughout leading up to the loan, and then throughout the course of the loan, duration of the loan, to if you have small business needs, maybe some finance help or marketing, sales, etc. They have staff that are equipped to do that. And then, like I said, maybe eventually build up to a bigger loan, a 7A loan, or maybe skip 7A entirely and jump into conventional, because you're at a place where you have your business is strong enough to carry a conventional loan by way of the finances and your credit, etc. So there is a path. There are different paths to small business financing. And the point being is that I wouldn't get discouraged if you go to a bank and they tell you, no, you don't qualify for a small business loan. Well, there are other programs out there that can help build the steps to some of the bigger loans. And these are only SBA loan programs. There are other state and local funds that are out there, and organizations like the Chamber and our resource partners, the Small Business Development Center, SCORE, the Women's Business Center. They're all equipped with advisors and programs that can help direct and help businesses navigate that lending or that small business financing landscape.
And would you have links or notes on these special programs?
Yeah, absolutely. I'm pretty sure we'll have the programs. I'll list the programs in the slides, in the subsequent slides in this presentation, and then I'll send this slide deck to Rhonda, and then Rhonda go ahead. Okay, perfect. I see that thumbs up.
Yeah, send it to either one of us. And what we'll do, because we're recording, we will post the recording plus the slide deck so that all the information is up on our website.
Thank you, guys.
Yeah, you bet. Of course. Thank you. Thanks for asking.
All right, so the 7A program, like I mentioned, it provides funds for a variety of uses. They're federally guaranteed loans up to $5 million. They have competitive loan terms and offer term loans or revolving lines of credit. So the uses include term loans for working capital, inventory, payables, lines of credit for operating expenses, term loans for equipment, tenant improvements on new or existing facilities, and term loans for debt refinance and change of ownership. The 7A program also has a sub-program, the international trade loans, and these loans are set up specifically to help businesses expand globally. And the guarantees are 75% to 90% of the loan. And there are three particular loan programs under this category. It's the International Trade Loan Program, Export Working Capital Program, and Export Express. If exporting is something that you are interested in, we have an area finance manager, James Newton, in the Portland metro area, who works exclusively on these programs. So you're certainly welcome to send us an email, and we'd be happy to connect you with James, but goes by Jim, who will be able to speak to you about these different programs. So I mentioned Community Advantage. This is also Goya mentioned the CDFIs, and this is one of those programs that would be administered by a CDFI, but not exclusively. And so they are originated and serviced by these mission-based lenders, and they're focused on underserved markets and receive loan guarantees up to 90%, which is higher than the 75 to 85% under standard 7A. And so Community Advantage is effectively a 7A loan with some more flexibility. And recently they upped the limit on the amount that you can take. It used to be $250, now it's $350, but depending on which Community Advantage lender that you work with, they might cap it lower than $350. This is an important program to remember, because if microloans, 50,000 is not enough capital for the business, then the next program would be the Community Advantage program, to look at the Community Advantage program, because it does have more flexible credit environments. It's still very much a standard underwriting process. They're going to look at your credit score, they're going to look at your cash flows, but they have some more flexibility with that. And it's also important to remember, because I do get calls from businesses who say that I need a loan, I need it right now. And I hear the SBA has some loan programs that can help me. And as you've heard by now, there are loan programs out there that can help you, but these loan programs are, the underwriting process is a standard underwriting process. So from closing, or from origination to closing, from the time that you submit the loan application to underwriting and then closing the loan, you're looking at anywhere from 60 to 90 days typically. Sometimes there are situations where lenders can get that done sooner, turn around sooner, but I would just bank on the air of caution and plan for that 60 to 90 days. So there's also, under the 7A program, Veterans Advantage, and that program, it's standard 7A loan structure and terms. The business has to be at least 51% owned by a veteran or military spouses, and it effectively is fee relief on the guarantee fees that the borrower is required. Because, and I think, yeah, this is great. So this slide needs to be updated. We have the fiscal year 2023 upfront guarantee fees for the 7A loans, and those have changed. You see here that for loans, because there are fees associated with the SBA loans, like there are with conventional loans, but the fee structure for the SBA guaranteed loans are a little bit higher. So you have the upfront guarantee fee, and then there's also a servicing fee. But here we have 350 or less, and it's 0%. Now that's been bumped to 500,000. So up to 500,000, there are no fees that the borrower will need to pay, which is exciting, because it can be the difference of anywhere between $3,000 to $15,000, depending on the loan amount, of course. So fee-wise, it's a good time to lend. Interest rate-wise, as most of you know, the interest rate environment isn't entirely favorable right now. So that's also something to keep in mind as well. 504 loan program. So we talked about the 7A, and 7A just think about as a general all-purpose flower for small business needs. Everything from, like we talked about, working capital to business acquisition to inventory, equipment. Pretty much has a large spread of uses. The 504 program, on the other hand, is locked in specifically for commercial real estate and heavy machinery and equipment. You can, under the 7A, also purchase commercial real estate, but there are different mechanics under the 7A loan and the 504. The 504 offers lower down payments, fixed interest rates, longer amortization schedules. You're able to retain your working capital because there is a lower down payment requirement, and it doesn't tie up other business assets, especially because with the commercial real estate purchases, the lender would take that real estate as collateral. So loan uses, you can use it to buy or construct an owner-occupied commercial real estate building. So for existing buildings, it needs to have 51% or more occupancy by the business. For new construction, it needs to have 60% or more occupancy by the business, and then 80% within 3 to 10 years. And then any fees associated with that purchase: appraisal, title, architect, engineer, and some of the loan fees can be included in the loan uses. And then, like I mentioned, the heavy machinery and equipment, so includes costs associated with purchase, transportation, dismantling, or installation. And it must have a useful life of at least 10 years. So the 504 loan program is structured a little bit differently than the 7A, in that at the end of the transaction, you're walking away with 2 mortgages. The borrower is expected to provide at least 10%. That can be a little bit higher, 15 or even 20%, depending on the situation. But know that you will be expected to put at least 10% down. And then the lender would put down 50%, cover 50% of the loan amount. And then the certified development company would cover 40%. And that certified development company is the one who's actually putting together the package for submission. The borrower won't really need to know that. Like I said, your interaction will always be with the lender. So you can approach the lender and say that you're looking to purchase commercial real estate and you're particularly interested in 504. They may push back and say, well, again, this is all assuming that you don't qualify conventionally, because at the end of the day, conventional is more favorable to the borrower. That's why that stipulation is there. The conventional loans are going to cost you less than an SBA guaranteed loan. The SBA guaranteed loans are going to be more expensive. The interest rates are going to be higher because it is a more risky loan. So presuming that you don't qualify conventionally, you approach the lender, you're interested in 504, they would then reach out to area CDC certified development company and work on putting together this loan request to submit to the SBA. And the terms under the 504 program are generally more favorable, especially on that CDC bit. The lender is originating their own loans. So they're following their own interest rates, loan terms, et cetera. The CDC is where the SBA portion of that loan is where you would get savings on the loan. But because of the current interest rate environment, those savings won't look so profound. So 7A, 504, 7A, you're working exclusively with the lender. 504, you're working with the lender. And then there's also a third party involved, the certified development company, and yourself. And so at the end of the transaction, like I said, you're coming out with 2 mortgages, 2 loans. And that's mostly for commercial real estate, but also for equipment as well. Now, microloan program that we briefly talked about is a program that's capped at $50,000, and they're a program that's administered by mission-based lenders and nonprofits. Interest rates are negotiated by the lender, so they have a spread that they can work from, and then depending on your credit situation, they would determine what the most appropriate interest rate would be in your situation. And then loan funds can be used for working capital, inventory, supplies, equipment, and furniture. And like I mentioned, they have the more flexible credit requirements. The local microlenders in our area are Mercy Corps Northwest, MISO, Micro Enterprise Services of Oregon, OWAMI, Oregon Association of Minority Entrepreneurs, and then Business Impact Northwest. I know for sure that two, Mercy Corps Northwest and Business Impact Northwest can certainly service businesses in McMinnville. I'm pretty sure MISO and OWAMI as well. So I would certainly, if a microloan is something that you're interested in, reach out to one or all of these organizations to see if they might be able to assist you. Yes.
So just to let you know, we are working, the city is working with MISO on a grant program right now.
Oh, that's excellent.
So hopefully it's part of that ARPA dollars that the city received. So we're working, well, it's not just us. We've got the city has hired a consultant, no, not a consultant, has hired someone to manage the ARPA funds. And so she is working directly with MISO on a program for business.
That's fantastic. Yeah.
More on that later. I don't have a lot of details. It is neophyte stage. However, we're working on it. So just to, the city's working on it, just to keep you all posted that that's happening.
Excellent.
Yeah.
Yeah. And that's a great example of why it's important to stay connected to your chamber, to stay connected to local organizations, because they have, as we just heard, a good pulse on all of the other funding streams that are available to small businesses, and sometimes by way of grant. It sounds like this is going to be a grant opportunity, which is not something that you will typically find at the SBA. There is one program, the Small Business Innovation Research, Small Business Technology Transfer Program, that is a grant program, but it's a very niche type of grant opportunity, generally for tech oriented businesses. If there are questions or curiosities around the program, I can certainly speak to that during Q&A, or you're welcome to email me. But I find that it doesn't normally require a lot of presentation time in these type of presentations. It's a specific program, so if you have questions, you're welcome to email me about that SBIR program. But that's really the only grant opportunity that we have at the SBA, and that's why being connected with your local organization is great, because they would have a good pulse on the type of grant opportunities that are out there, if they're out there. So benefits of SBA lending: reasonable term loans for which you might not otherwise qualify, smaller equity requirements, which means lower down payments, longer repayments, longer repayment terms, which means that you'll have lower monthly payments and increased cash flow. And where there's a benefit to the borrowers, there's a benefit to the community by promoting economic growth, generating tax revenue for the community, creating jobs, and encouraging innovation. So this is a look at SBA lending highlights for our district office, and we cover all of Oregon and Southwest Washington as well. And this is just to demonstrate that businesses are taking advantage of these programs. These loans are happening. And this individual here in the photo, I like telling this story. He's Origami Catering business in Portland, and he started in 2007, right before the recession, and like everybody was hit hard by the recession, was able to secure a microloan to help him kind of stay above water. And then fast forward to 2014, he was able to take on a bigger SBA loan to date, he's taken on a couple of SBA loans and has a huge facility in Portland and very successful. But it was, I mean, we're talking about 2007 to today, a long journey, but along that way, he was able to exercise and take advantage of the SBA loan programs to the point where he is now running a very successful business in Portland. So Lender Match is another resource for you all to be aware of. It's on our website. If you go onto SBA.gov, you'll be able to find Lender Match there. And basically, you input your information, your loan request. It's a couple of minutes. That information is sent out to a network of lenders who've subscribed to participate in Lender Match. And then those lenders will review the loan request. If they, excuse me, if they think they have a product that might meet the request, then they would reach out to you directly. And then you're welcome to compare rates, terms, fees, and more. And then if you think this is you found a good fit, you can apply for a small business loan with them. So that's just another resource for the small businesses. If you're not entirely sure where to start, our microlenders also participate in Lender Match. So even if it is a smaller loan request, they would be able to see it. But if you know with certainty that there's a particular program that you're interested in, microloans, we only have 4 microlenders, so it's not too many people to follow up with. I would encourage that you just reach out to them directly. And then the SBA Resource Partner Network, we work with the Small Business Development Center, SCORE, and Mercy Corps Northwest, which hosts our Women's Business Center. All 3 of those organizations provide free small business counseling and advising, and they also have programs and workshops that businesses can apply for, low-cost programs and workshops on everything and anything that you can think of small business related. So they're certainly a good resource to have and at least know about, so that if something does come up, you'll know where to turn and hopefully save yourself some angst and potentially some money, because there are a number of paid resources out there that would happily help you for a fee. So there are options. The point is, there are options. There are the SBA resource partners, and there are other resources out there as well. So if you'd like to learn more, you can reach out to our office or go onto the SBA.gov website. It has a lot of information, even small modules and virtual workshops that you can work through on a number of different small business subjects. So with that, I would like to open it up to questions. If you have questions, I don't see the time, so I'm not entirely sure how we are.
It's 9:35.
Okay, perfect.
So man, you flew through that.
Yeah.
That was great. Thank you. I don't know, Jerry or Raul, if you have any questions.
I have lots of questions. I just to start right yet. Not sure. So you're saying the microloans are the best possibility of securing a loan for a startup business, correct? Somebody without capital, worst case scenario credit situations, etc.
Yeah, I mean, it's not a guaranteed thing. Like I said,
Right.
They're still gonna scrutinize and make sure that they're making a reasonable loan to an established business. But yeah, go on.
And is that still within the bank parameters of loans? Do they still get a say yay or nay within their parameters on those?
Yeah, so they do have their own credit requirements, but those credit requirements are more flexible than what you would find at the bank.
Okay.
And you asked if the microloans are for startups specifically. In other words, the 7A program will also work for a startup business, presuming that there are enough pieces there to work with. So if you have no cash flow, if you have no collateral, if you have poor credit, then the 7A would not make sense. Actually, in that situation, I don't know that a microloan would either. But I just want to note that yes, you can use microloans for a startup business, and yes, you can use microloans for, 7A loans for a startup business.
Okay, thank you.
Mhm.
Are there any other questions? Oh my goodness, so much information, Anna. Thank you.
Yeah, my pleasure. And like I said, I
Mhm.
will also, when I send this slide deck to Rhonda, I'll include, well, you have my information, so you're welcome to share that, distribute that information. And so that if
I have one question, sorry.
Oh,
Yep.
yeah, please.
When you applied, do you apply to the SBA or do you apply to each company separately?
you apply to each company separately.
Okay,
You apply to each lender separately. The lender match option, when you go down that route, if you decide to use lender match to try to figure out which lenders would be willing to work with you, then that information is sent out. That's done through our website, but that information is sent to the lenders, and then the lenders will turn around and follow up with you. It won't be the SBA.
okay, thank you.
But the SBA would still be guaranteeing the loan, correct?
Yes, right. The SBA works with the lenders. The lenders work with the borrowers.
That's what I thought. Okay. Just wanted to make sure I got that straight in my head.
Yes,
Wow.
yeah, no, you would be, we field those calls every single day. It's a little bit confusing, but hopefully with more time and more marketing, people will understand that SBA is not a direct lender, and that their transaction happens with the lender or the nonprofit or mission-based lender.
Got it. Oh my goodness. But such great resources for business.
Yes, thank you all for all of your information and knowledge. It's greatly appreciated.
Oh, thank you. Thanks, Jerry, for being here today, and Raul too.
Yeah, thank you for the
Appreciate it.
questions.
Yeah, very good questions. Thank you, Anna. That was fantastic. I super appreciate everything that you do. I know we've had a lot of SBA workshops recently, and we appreciate that. I think, as businesses are trying to recover from the pandemic, the resources that you provide have been very, very helpful. And we appreciate the connection that we have with you. So thank you so much for doing this. We appreciate you. We will share this recording on our chamber website, and we will and also share these slides as well. So thank you. Look forward to seeing everybody again soon. Take care, Anna. Thank you. I know we'll talk again and look
Yes.
at other options for presentations that we can have the SBA do for us. Thank you. I'm going to stop the recording now.
Oh my